In this video, I'll be revealing my investing strategy for 2022 and what you can do to prepare for the new year if you're a beginner or new to investing. I will also show you my current stock and crypto portfolio allocation and if I plan to make any changes in the new year. So if you're interested in hearing how I plan to make some money in 2022, then grab yourself a drink, sit back, relax and enjoy the video. What is going on guys, it's Brian here and I want to wish you a very happy new year for 2022. Now I don't want to waste your time, so let's get straight into what you came for. So here's my current portfolio breakdown. I've not included any real estate because I don't really own any investment properties outside the house I'm living in. My portfolio is mainly made up of stocks and cryptocurrency because these are the two asset classes that I have a deep understanding in. As you can see, 37% of my portfolio is made up of individual stocks. This is what I call the active portion of my portfolio. I hold about 25 different Australian and US stocks. It's actually mainly US stocks. I don't hold too many Australian individual companies as I believe the ASX is quite top heavy and the best companies will continue to dominate, so I prefer buying index funds or ETFs of Australian companies instead. As you can see from this pie chart, these 25 stocks are made up of growth stocks, blue chip stocks, value stocks and some speculative stocks. My main focus is innovative growth stocks that are attempting to disrupt the industry. If you're a beginner, I would strongly recommend you don't hold as many stocks as me because you only have so much time in a day to be tracking this many. A lot of the stocks I hold are companies that I love fundamentally and happy to hold for the long term without having to track them too much. I'll probably read their quarterly financial reports every 3 months and that's about it. My allocation percentage for each of these 25 stocks is based on how bullish I am for each company. So basically my top 3 most bullish stocks account for almost 50% of the 25 stocks. In case you're wondering, my top 3 stocks are Tesla, Palantir and Facebook, or Meta Platforms as it is now called. These are my highest conviction stocks. I actually revealed this on my Instagram account a few days ago, so if you'd like more up-to-date content, follow me on Instagram at brianinvest.official. The reason I'm bullish on these 3 stocks is because I believe they are innovative companies that are attempting to disrupt the industries, and the total addressable market for these industries are simply enormous. Tesla is disrupting the transport industry, and if they can get their autonomous taxi network up and going in the future, that is a potential goldmine for the company. They are currently scaling production like crazy to meet their high demand. They are poised to ramp up production this year in 2 of their newly built gigafactories in Berlin and Texas. Palantir is a leading data analytics company. I believe data will be the most valuable commodity in the future, and many large companies will be using data analytics to identify and solve problems before they even happen. I believe Palantir will be at the forefront of the data revolution. Facebook, or Meta Platforms as it is now called, is a profit-making machine with their online advertising business bringing in the most revenue. I'm particularly interested in what they will do with the metaverse and how it will affect everyday life. Mark Zuckerberg has announced his plans to build this virtual reality which will merge virtual life with real life and create endless new playgrounds for everyone. Have you seen the movie Ready Player One? Think of a virtual world similar to that. Either way, it's a stock that I think will outperform in the next decade. Since these 3 stocks are my biggest investments, I usually keep a close eye on them. So I'm always tracking any news about them, reading their financial reports each quarter and checking their company guidance. That is the thing with active investing. You do need to be active as the name suggests and keep track of your stocks. The remaining 22 stocks are a mixture of companies which are strong leaders in the industry, beaten down stocks from their all-time highs, or speculative companies that have the potential to grow exponentially. I am less focused on these companies because the amount I've allocated to each of them won't ruin me financially if something bad happened to them. So sometimes I'll read an article about them if I see one, but I'm not actively looking for news unlike my top 3 stocks. If you're interested to know which other companies I own, comment down below and I'll do a separate video covering them. If I go over them in this video, it'll probably take too long and I want to keep this video short and sweet. If we go back to the pie chart, you will see 26% of my portfolio is made up of index funds or ETFs. This is what I like to call the passive portion of my stock portfolio since I don't have to put too much effort with these. So basically an ETF allows you to get exposure to many companies in a single stock. I currently hold 4 ETFs. The first one is VAS, which is the Vanguard Australian Shares ETF, which tracks the top 300 Australian companies listed on the ASX. This contains well-known Australian companies like Commonwealth Bank, BHP and Woolworths. This ETF also pays me a dividend 4 times a year, which I set to auto-invest. This means instead of receiving cash in my bank, they will automatically buy more shares for me, often at a little discount. This is just my way of automating my investing so I have less things to do. As mentioned before, I don't really buy into individual Australian companies because I believe all the best ones will continue to dominate and I would rather buy an ETF and get exposure to all of them. I much prefer buying individual US companies as they have a bigger global reach and more potential to scale. The second ETF I own is VGS, which is the Vanguard International Shares ETF, which tracks the top 1,500 companies in the world. It is very US heavy, with 70% of the funds being US companies, so essentially it's a combination of the S&P 500 plus other top companies from around the world. The third ETF I own is NDQ, which is the Nasdaq 100 ETF. It tracks the top 100 companies listed on the Nasdaq, which is mainly comprised of big tech companies like Apple, Microsoft and Google. This ETF has done amazingly well in 2021 with about 30% gains, so I'm very happy with it. The last ETF I own is VAE, which is the Vanguard Asia excluding Japan shares ETF. This ETF did extremely well in 2020, but in 2021 it kind of went sideways. However, it still pays dividends just like the other three, which I automatically reinvest. The ETF includes large Asian companies like Alibaba, Tencent Holdings, and Samsung. I believe Asian stocks could rebound in 2022, but regardless, I'm happy to hold this ETF for the long term. Now let's move on to my crypto portfolio, which makes up 22% of my total allocation. Please keep in mind I didn't originally plan to have this much in cryptocurrency, but this has grown into this percentage over the last 2 years. The portfolio is mainly made up of Bitcoin and Ethereum, which are the two cryptocurrencies I am most bullish on. I just continue to dollar cost average into them over time, as I think these are the only two guaranteed to still be around in 10 years time. There were a few other crypto trades that I did during the year which worked out well, such as getting to Solana early and taking profits. I also traded Cardano for Avalanche, which has worked out well. I also hold and trade gaming metaverse coins like Sandbox and Engine. However, these only make up a tiny portion of my portfolio because these are quite speculative, therefore more risky. Finally, the rest of my allocation is 15% in cash. I always like to keep cash sitting around in case there is a good investment opportunity that presents itself during the year. For example, back in 2020, I was able to buy some stocks on the cheap during the first lockdown. I would always recommend having some cash on the sidelines to take advantage of any opportunities that may present itself. So now let's talk about my plans for 2022. If we see higher inflation in 2022, I may look to add some value and financial stocks which historically performs better in inflationary environments. These are stocks like Johnson & Johnson, Walmart, and JP Morgan. If we see higher interest rates, this is where financial companies like JP Morgan will perform well because they can charge more interest to their customers. I know some investors like to rotate out of certain sectors and into new sectors, but I don't really like to do this. Any stocks I buy, I'm thinking what it can do for me in 10 years time, and selling the stocks early due to economic conditions won't help me with that. I would only rotate if I don't have any cash on the sidelines and see a good opportunity which is too good to pass up. With that being said, I don't see growth stocks doing well this year. We have high inflation and high interest rates. However, since I am a long-term investor, I will be happy to buy some of my favorite growth stocks on the cheap if they were to fall below certain levels. So this is something I'll be monitoring during the year, and of course if I see any good deals, I'll let you guys know. I will also continue to dollar cost average into my index funds and ETFs because honestly, if you're new and don't want to spend too much time researching different companies, this is the best strategy to build wealth by far. By spreading out my purchases at different times during the year, it reduces the risk of market volatility and I will get the average price. It's just less stressful this way. In terms of crypto, I think this will be a big year for crypto, especially if we have a high inflation environment. If we can get a Bitcoin spot ETF approved this year, this will be a very bullish sign for Bitcoin. And of course, any good news for Bitcoin will be good news for altcoins. I also think this will be a great year for NFTs, which will be great news for Ethereum, especially if they can finally get Ethereum 2.0 up and running. If we go into a crypto bear market, I have some cash sitting on the sidelines to go shopping with. At the moment, I'm comfortable with my crypto allocation at around 22%, but I may look to increase it to about 25% during the year. There are some cryptocurrencies that I'm bullish on and currently buying, and I'll make a separate video about it very soon. Also, speaking of NFTs, my goal this year is to do more research on NFTs. I already have a sound understanding of this asset, but I want to get a deeper understanding as I find it very fascinating. I do currently own a few NFTs and I am open to buying more if I can find a project that I love for a good price. Okay, so now you may be thinking, Brian, we know what you're going to be doing, but what would you recommend for someone who's new to investing in 2022? What should I do? Well, that's a great question. I think the best thing for a new investor to do in 2022 is to get educated on the stock market and how it works. You can do this by reading financial books or watching YouTube videos or just going on Google and learning. It's all free. I just think that it's important to get a basic understanding of how it works. I strongly encourage people to start investing as soon as they can. If you are not investing, then your money is being eaten away by inflation every single day. After you have a basic understanding of the stock market, you can start investing in index funds and begin developing good financial habits like saving part of your paycheck and dollar cost averaging into index funds. If you're in Australia like me, you can stick to ETFs like VAS and VGS. I've actually made a separate video about this, so you can go check it out if you want. If you're in the US, then VOO or VTI are some popular options. For me, I don't care if you have $100 or $10,000 to start off with. The most important thing is you get started and begin to think like an investor. Here's a stock market lesson I want to show you. This is the tweet I recently made. 100% gains on $100 is $100. 10% gains on $10,000 is $1,000. And 1% gain on $1 million is $10,000. Now the lesson here is not to focus too much on percentage gains and focus more on building up your nest egg as quickly as you can. You may have heard the saying, you need money to make money, and that's completely right when it comes to the stock market. In the beginning, you should focus on saving and investing more into your portfolio, not trying to maximize your return. Also, this is not financial advice, but I would look into getting some small exposure into cryptocurrency. If you're a beginner, I would recommend learning about Bitcoin and maybe Ethereum to start off with, and see for yourself if crypto is something you'd want to invest in. I strongly believe this asset class will play a big role in how the financial system will work in the future. There is no doubt that every year there will be more mass adoption, so you want to be on the right side of history when this happens. So wrapping up, I'm looking to add some value stocks this year to combat any potential high inflation environment. I'm also willing to buy some of my favorite growth stocks on the dip if they fall due to economic reasons and not fundamental reasons. In addition, I'm looking to add more cryptocurrency to my portfolio if the opportunity presents itself, and I have plans to potentially get more involved in NFTs. If you're a new investor, then all I can say is try to get started as soon as possible so you can start adopting an investor mindset. I hope you enjoyed this video. Here are a few more videos you can watch in the meantime. Please give this video a like if you enjoyed it, and make sure you subscribe to my channel for more future content. And until next time, my name is Brian, and I hope you make a lot of money.